Mr. Manoj Viswanathan joins us on the show right now, the MD and CEO at Home First Finance. Hi, Manoj. Good to be speaking with you. Thanks so much for making time and speaking with us. First up, run us through your earnings in terms of what you would rate your Q2 numbers to be like, because the street is clearly enthused by that. And more importantly, can you sustain this momentum as we head into Q3?
Sure. I think there are three broad numbers that we are extremely happy about for this quarter. One is that we have hit the 16.5% ROE figure, and the ROE continues to improve. So we moved it up by 20 basis points this quarter. The asset quality has been extremely strong. We are very happy with that, considering what is happening in the environment. So our 30-day past due reduced by 10 basis points. Our gross stage 3 remained at 1.7%. So extremely happy with those figures. Of course, the big number is that the AUM has grown by 34%. So which is again a consistent growth. 30% plus is what we have been aiming for. So this quarter, the year-on-year growth in AUM was 34%. So we are very happy with that.
And so you should be, and so are the investors. But you talked about this 34% AUM growth. Do you think this is something which is sustainable? And given the fact of full year, you're working with a number of around 30%, is there a case now to increase that guidance and maybe aim for 35-40%?
So the AUM growth of 30% is something that we were aiming for, and broadly we were actually aiming to hit the AUM mark of 20,000 crores by 2027. So all our planning on the ground in terms of distribution, adding people, etc., is based on that number. So it would be it would be difficult, or it would not be prudent to change that number in the middle of this whole journey. So we would stick with our guidance of 30% AUM growth, and we are working towards that number quarter on quarter.
But I'm just going through your presentation, and it seems like your spread have come off to 5.3% versus 5.6%. Return on asset is down to 3.4% versus similar time last year when it was 3.8%. And even sequentially, that's gone down. What's the way forward for some of these metrics, and why are we seeing a bit of a pressure here?
So spread is something that we have been guiding for, because it's been an increasing interest rate environment, and while we are able to maintain our top line yield numbers, at about 13.5%, because of the creeping up of the cost of borrowing, the spreads have been compressing, and that's something that we have been guiding for. But we have also mentioned that we are confident of maintaining a 5 to 5.3% spread. So which is what we have done. Actually, our spread has increased since last quarter from 5.2 to 5.3%. As far as the NIMs and the ROAs are concerned, that would not be a comparable number, because we are still a growing organization, and the debt to equity is continuously moving up, the asset to equity is continuously moving up. So as the leverage is moving up, both these numbers, the NIM as well as the ROA, are it's mathematically likely to compress. So that would not be a fair comparison. So which is why we are always guiding to the trying to direct the focus on the ROE number, because that would be the real number to compare. Because as the leverage keeps on increasing, as you can see, our leverage has moved up by 20 basis points since last quarter itself. And if you compare with last year, it's more than 1% up. So as the leverage moves up, both NIMs as well as ROAs are likely to compress mathematically. But the positive flip side to that is the ROE is also increasing.
Get that mathematical, basis that you're talking about, but just help us brace with what could be the, let's say, compression in NIM going forward on account of that, or the ROEs which are likely to kind of go up. What could be those numbers that we should watch out for a bit?
So the ROAs, will keep, like I said, as the leverage moves up, the ROAs are likely to move down. So that is something like maybe a 5 basis points every quarter is the kind of movement that we are likely to see. But obviously, correspondingly, the leverage is going up. So, the ROEs are likely to keep going up by about 10 to 15 basis points every quarter.
To now put this focus on the affordable housing segment and the PMAY 2 scheme, will there be an impact, if at all, of the unsecured sector on the affordable housing bit at all? Because we have been hearing a lot of these, issues around unsecured lending. Is that something that might worry you in some portions?
Theoretically, yes, because while our segment, the housing segment is a couple of notches higher than the segment that is, borrowing unsecured loans. Theoretically, yes, but we have not seen any such stress on our portfolio. Our collections figures, early bucket collections, etc., have been fairly strong for the last 2 quarters. So we are not seeing that come through as yet.
You're confident that your GNPA will remain around that 1.7% mark, then you're not expecting any further worsening of the asset quality?
No, we are not seeing any worsening of the asset quality. In fact, our 30-day past due reduced by 10 basis points, which gives us the confidence that those figures are likely to remain at those levels.
What about the competitive intensity in the sector? Because we were just speaking with the management of PNB Housing. They are going, in this segment at a very, very fast way. Is the space getting very heated up with the banks and other NBFCs eyeing a pie for the affordable housing?
So, affordable housing has always seen some competition. There are, almost 90 housing finance companies and, a large number of banks which are, competing in this segment. But on the positive side, it's also very, very large segment, growing very, growing at a fast clip. So, there is enough space for, more players.
And I understand that to diversify your funding mix, you're of course looking for different areas, but overall your cost of borrowing has increased by 10 basis points. And I understand with the kind of overall setup that we have, is there any expectation of a further increase in the cost of funding?
Cost of funding, our expectation is that it's likely to remain at these levels. If there is no further increase in the policy rates, which I don't think anybody is expecting an increase in policy rates from here on. So hopefully the borrowing cost should remain at these levels.
Should remain at these levels. And I know we touched upon this point, but I just wanted to clarify a bit more for our viewers, Manoj. You target the first-time buyers and the low and middle income kind of group, and many brokerages are pointing out it is the new to credit customers which could be the biggest threat. Tell me, what are you doing in terms of your due diligence or your negative rate, or how you're looking at some of these new customers to make sure that your asset quality and book remains pristine?
So surprisingly, the new to credit customers have, the percentage has been coming down quite dramatically. And today, only about 15% of our customers are actually new to credit, so to say. 85% of the customers have some form of borrowing. Either they have taken some loan for consumer durables or, some personal loans, etc. So when they come to us for a housing loan, they already have some experience of borrowing, and we also have some experience of their track record, to kind of go by. So we don't see new to credit customers as a big risk. And of course, if the customers over leverage themselves by borrowing more after taking the housing loan, that could be a challenge. But what we have generally seen is that people who take housing loans are fairly conservative in their borrowing outlook, and they don't really leverage themselves so much. So they are kind of self-selecting good customers, so to say, in the housing segment.
And hope that they remain prudent in their, borrowing, and you remain prudent in your lending. Thanks so much, Manoj, for making time and speaking with us. Appreciate you joining us today.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits, and then break right through them. Become something more. It's my time to rise.